Insurance practice questions for the wise. You get your first job, you're excited. You get married. You have a family. You buy your first house. We work hard, eat well. How do I protect my family if something bad happens? No one plans on an accident. Life can change fast. Insurance can help. There's auto insurance. Most types of vehicles and liability. Life pays money to beneficiaries when someone dies. Health, you receive treatment when you're sick. Homeowners protects your belongings. Disability, loss of work. Insurance is shared risk for unexpected events. Insurance is frequently described as a method of sharing the risk because the insured shares the risk of loss with all the other policy members. The purpose of insurance is not to diversify an investment portfolio. For the past 5 years, a person has had a $20,000 whole life insurance policy that has a cash value clause. The person decides to surrender the policy, a calculated amount of money which includes the premiums paid as well as the interest on that money. Why is term insurance usually the least inexpensive type of life insurance? The policy only pays a death benefit. Which statement does not accurately describe a characteristic of cash value for whole life insurance? Policy that accumulates cash value is less expensive than a policy that does not. The only type of life insurance that does not develop a cash value is term life insurance. Sally took out a $50,000 life insurance policy. The $50,000 amount of coverage is called the death benefit or face value. Mr. Akon's wife died. The money he received as the beneficiary on her life insurance is called the death benefit or face value. John's job provided the main income for his family. He died unexpectedly and had no life insurance. The probable financial consequence for his wife and 2 children does not include an increase in income and expenses. You have a $2,000 loss. Your insurance company pays you $1,500 on the claim for the loss. The $500 the insurance did not pay is a result of your policy having a deductible. Richard's auto insurance policy expired on May 2002. Richard was upset when his insurance agent decided to change his insurance companies. At 10 a.m. on May 16th, he drove to a different agent to buy a new policy. He had an accident. Who is liable for the damage? Richard is. He had no insurance. Which of the following insurance covers vehicles? Automobile. Ben's truck is crushed by a hit-and-run driver. Scott is hit by an uninsured driver. How do they receive payments? Uninsured or no-fault motorist coverage. Gwen receives a bill for her auto insurance company, and she sends a check to the company to make sure her policy is not canceled. The cost of her policy is called the premium. A person buys a flat-screen TV. The person has homeowner's insurance. Why would it be appropriate to add a personal property floater to that insurance? It covers the cost of replacement should the television get damaged or stolen. A woman has just received a very expensive piece of jewelry. The woman has homeowner's insurance. Which statement would be most appropriate for her to make to her insurance agent? I think I need a personal property floater. Neil will be traveling by air in Southeast Asia for a 6-week vacation. Which item will not provide protection during the trip? Take his passport. A person buys a homeowner's insurance policy with a $250 deductible, which means the person will have to pay the first $250, which will be deducted from the claim settlement paid by the insurance company. If you have a managed healthcare plan, it means that you usually must first meet your primary healthcare physician. When Jessie needs healthcare, she must first go to her primary care physician, who coordinates her care and decides whether Jessie should see a specialist. Jessie pays $10 as the copay when she sees her primary care doctor. Jessie has what type of insurance? Managed care. Sally's health insurance policy requires her to pay the first $500 of medical costs each year before the company will pay any of her medical bills. The policy provision is the annual deductible. When a self-employed person decides to purchase disability insurance, it is generally to protect against the financial effects of not being able to work. Debbie owns a clothing store. She's concerned that a customer who's injured in the store will sue. Which type of insurance should Debbie purchase? Liability insurance. Generally, the higher the deductible on an insurance policy, the lower the premium. Lucy has no insurance. The situations she should consider insuring first are losses resulting from illness, accident, or disability. The happiest people don't have the best of everything. They just make the best of everything. Thanks for watching. This is Miss Marshall.